Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 12th of September 2021. And we're asking the question, does the Fed consist of greedy bankers at the top or rule-abiding officials? Let's take a look. Now firstly, a quick shout out to 3 videos we produced earlier today. Gold and silver, equities and cryptos all fell last week. Why? Where should we be investing now? And will green technology harm gold but help silver? And we've placed links to these 3 videos below. Now in this video we're highlighting what even we believe to be an injustice and unfair. We have instances where 2 of the US's most senior bank governors have been able to comply with the rules while at the same time enrich themselves in ways which others would not be allowed to do so. What we shall do now is take a look at a Reuters article which highlights these 2 gentlemen, and we express our thoughts during the reading. And at the end, if you like the article and the video, please give us a thumbs up, subscribe and press the bell sign. So let's take a look at that article. Reuters article dated September 10th, 2021. Trading tantrum. Fed officials' personal dealings stir controversy. Call for change. Media reports this week that 2 of the Federal Reserve's 12 regional bank presidents were active traders, has some of the central bank's most vocal critics questioning the rules that allowed them to engage in the transactions in the first place. Dallas Fed President Robert Kaplan and Boston Fed President Eric Rosengren made frequent or substantial trades in 2020, the Wall Street Journal and Bloomberg reported earlier this week. The trades occurred during a year in which the central bank took major actions to shore up the economy and swooning financial markets after they were broadsided by the coronavirus pandemic. While the trades were permitted under the Fed system's ethics guidelines, their disclosure prompted some observers and a top lawmaker to flag possible conflicts of interest. Forget about the individual trade, said Benjamin Dolchin, director of the Fed Up campaign at the Center for Popular Democracy, a group that advocates for the Fed to focus more on the needs of American workers. The issue is that a president of a Fed bank, one of the handful of people who set our country's monetary policy, so clearly has his personal interests aligned with the success of our biggest corporations. On Thursday, Kaplan and Rosengren said in separate statements that their trades complied with the Fed's ethics rules. They also said they would change their investment practices to address even the appearance of any conflict of interest and sell all individual stock holdings by September 30th, moving the proceeds into cash or passively invested index funds. Both Kaplan and Rosengren said they would not trade on those accounts as long as they are serving as Fed presidents. The changes came after they both faced criticism for transactions made last year, dealing that were first reported by the Wall Street Journal this week. Each has since made his annual financial disclosures public. The documents show that Kaplan, for instance, bought and sold at least $18 million in individual stocks in 2020, mostly tech stocks like Apple Inc. and Amazon, and energy stocks such as Marathon Petroleum Corp. All of those transactions were reviewed by the Dallas Fed General Counsel, said Dallas Fed spokesman James Hoard. Rosengren, who has publicly shared concerns about potential overvaluation risks in the commercial real estate sector, held stakes in 4 real estate investment trusts and made other investment trades, as highlighted by a Bloomberg report. Regrettably, the appearance of such permissible personal investment decisions has generated some questions, so I've made the decision to divest these assets to underscore my commitment to Fed ethics guidelines, Rosengren said in a statement on Thursday. Calls for greater oversight. One has to ask, why did he not actually do this earlier? Surely a man of his experience wouldn't have needed guidance about potential conflicts of interest. Fed officials are subject to specific restrictions, such as not trading during the blackout period around each Fed meeting when policy-sensitive information is distributed, not holding stocks in banks or mutual funds concentrated in the financial sector, and not reselling securities within 30 days of purchase. But the Code of Conduct has broader language as well. Quote, an employee should avoid any situation that might give rise to an actual conflict of interest or even the appearance of a conflict of interest, unquote, the Code states. Those with access to market-moving information, quote, should avoid engaging in any financial transactions, the timing of which could create the appearance of acting on inside information concerning Federal Reserve deliberations and actions, unquote. Now, the financial disclosures did not look strikingly different from prior years, but 2020 was a signature year for the Fed in which, by its own account, it crossed red lines to ensure financial markets continued to function. In a rapid-fire response to the then unfolding pandemic, Fed policymakers in March 2020 slashed interest rates to near zero and rolled out programs meant to keep the markets for Treasury bonds, mortgage-backed securities and corporate bonds working smoothly. The Fed's fast action was praised for helping to stave off a larger financial market collapse, an achievement Fed officials say helped to minimize the hit to the economy. But some criticized the Fed's moves for helping to boost asset prices while not doing enough to support small businesses and households on Main Street. Some Fed watchers say it may be time for the rules to be reviewed. Really? This is more evidence that the oversight of the Federal Reserve Regional Bank Presidents is broken, said Aaron Klein, a senior fellow at the Brookings Institution. I don't know if this is a failure to enforce the rules or a failure of the rules. US Senator Elizabeth Warren, long one of Washington's most vocal critics of the central bank's approach to financial regulation, said Fed officials should not be allowed to trade. I've said it before and will say it again. Members of Congress and senior government officials should not be allowed to trade or own stocks, Warren posted on Twitter on Friday. Period. Do you know, we tend to agree with her. Having said that, we also have to accept the fact that the people generally moving into this environment are quite likely to be stock and shareholders, and it would be slightly unfair if one insisted that they had to sell them all, which may not be at a good time, in order to take up an appointment. You just imagine being worth hundreds of millions of dollars or tens of millions of dollars, going into a Fed chair job where you might get a couple $100,000 in salary and be forced to sell equities, which may rise considerably more in the near future or may be taken at a loss currently, while you intend holding them for the long term, which is why moving your existing holdings into what is commonly called a blind trust is perhaps the fairest for both parties concerned. So whether one becomes president or an official in Congress or a central banker, such as a governor, or the head of any institution that could have an impact on governmental policy, then moving one's finances into blind trusts are the most sensible thing to do. Particularly, it removes from the individual any potential accusation of market manipulation and looking after one's own interests. Because, of course, one could say that buying Amazon stocks is a logical conclusion if we're all in shutdown. But maybe that didn't occur to a lot of people until we were in shutdown for a long time. And if the central bank knows that we are likely to be in shutdown for a long time, then it would encourage one to purchase Amazon stocks, because how else are you going to get your goods? These are the sort of factors that really governments should be forced to introduce by the people who elect them. And if they do not, then you should unelect them, regardless of which political party they belong to. That's not saying, though, they shouldn't be allowed to have investments. What it's saying is they shouldn't be allowed to control those investments while they hold those public appointments. It's common sense, it's fair, and quite frankly, it's right. We often hear people condemn bankers. Unfortunately, the majority of bankers are pretty honest people, simply because they're just carrying out a perfunctory role as dictated by the banking industry. It's when people get to the top of these organizations or have an impact on policy that question marks are raised, and particularly in investment banks where traders with portfolio control of not only millions but hundreds of millions of dollars and sometimes billions of dollars tend to attempt to manipulate and sometimes succeed markets. Of course, all of these people should be condemned, and those caught deliberately committing fraud should be imprisoned. But in this case, we have governors obeying the rules which, quite frankly, should be far stricter. And even we agree with that. But what are your thoughts? Do share them, and meanwhile, do subscribe to our channel, press the bell sign, and hopefully give us a thumbs up. Thank you for watching. Illuminati silver owners come from a background of banking, international wealth management, and economics. Having now retired from these worlds, we are not qualified to give investment advice. Therefore, this and other productions must not be deemed to be giving such advice and merely represent the personal views of its owners.